Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that continuation to the downside on the Bitcoin chart. Of course, you can see our altcoins just absolutely bleeding because of that peak that we did put in on that distribution top that I have been talking about for several weeks now, as of course we hit that critical resistance on the Bitcoin chart. Now, guys, we do want to just go over briefly what happened on Wednesday and Thursday, because of course I made a massive 1 hour video just before the CPI to let you know what could possibly happen. And of course, the CPI just came in pretty much as expected. Now, it was slightly under the expectation, so overall, just kind of a neutral reading. But there's a problem with that. A neutral reading is not a good reading, and so it wasn't a good enough reason for the charts to pump on its own, okay? Just doing what the market expects isn't going to get you anywhere. That's just going to justify the current price level. And then, of course, all those other worries in the market could actually end up bringing the chart down, even if the data was neutral. And that's why we would have to take it by ear if it was a neutral condition. Unfortunately, we didn't get a positive reading, which in that case would have been lower inflation. It just was as expected. And then, of course, on Thursday, we did, which of course is today, we did get that reading on the PPI, which is, again, just pretty much in line with expected, a little bit better than expected, not as good as the previous reading on the PPI over here, but the core just holding steady. And then the year over year showed some improvement, and the core year over year did show some improvement. Not great, but this is a little bit more positive. So there is a little bit more strength that the PPI gave to the chart today. That's probably why we're not just falling to hell. But of course, there is still some concern that inflation isn't going down fast enough. And the concern there is only that, it might not go down fast enough by the next Fed meeting. And so maybe they're going to increase interest rates again. And as I told you many, many times, the market is pricing in that they will cut rates. And of course, the Fed, as I keep telling you guys, they're probably just going to keep increasing rates, or pause at best. And so there is this differential between the market expectation and what I would say is reality. And so the market is getting a bit of a reality check as it's pulling back. Okay, guys, the jobs did show that there, is that kind of recession narrative continuing. So job loss claims, up a slight tick there. And then, initial jobless claims actually up fairly significantly over the expectation. Not enough to write home about, but enough to say that, yes, Mr. Fed Chairman Jerome Powell, the recession is probably going to be real, and jobs are starting to feel it. And so maybe you don't have to increase interest rates as much as you think, because maybe the recession is going to take care of inflation as people stop spending and overheating goes down in the market. But this is all up in the air. Very hard to trade off of, multiple moving parts. We're doing a pretty good job, but it is time to give an update on the chart. So guys, let's just head straight over to Bitcoin. And of course, you can see that, as I mentioned, if we're above my good old median line on the Bollinger Bands there, you can just watch us climb that band. And if we're underneath, or if we're just kind of chopping around on it, then there's the potential to fall down. And so as long as we're under it, we're probably falling. And so, obviously you can take your cues accordingly. And we did break down under the band over here, and we stayed under it. And then we just basically, climbed it one last time before just chopping around. We're still kind of chopping around or under it. And so, for the alpha fam, like we've pretty much been out over here. We've been out over here. And we did have caution over here. Of course, we did take the mean regression play over here, but that did not suggest that we were just going to pump to heaven. It was just always a mean reversion play. And, you know, what is a mean reversion play? It returned to the average price, and now it's perhaps having continuation to the downside. There was a chance for another mean reversion right here. We did get a bit of a spike. If I zoom in there, you can probably see that weird kind of Darth Maul candle that we got the other day. It was just up and down, right? Just kind of shaking out the market, liquidating everyone up, liquidating everyone down, and then the market chose its true direction. I actually did get an amazing gala play off of that, but that was in another Discord. Guys, you can see that what did happen at the end of the day is that we did tap that median line on the Bollinger Bands there, and then of course we're getting sent down to our candlestick lows over here, which, you know, let's go ahead and throw some structure on this just so we can remember what we were discovering on the past episodes there, which is, let's take a look at our trend. So this is the trend that we established, you know, months and months ago, and we've just been following it, from the top to the bottom, to the midline, to the bottom, to the top, to the midline, to the top, to the bottom, to the top, to the midline. And, you know, we were hoping that we would get another play to the top, right, which would have been that $32,000 to $33,000 area. But there were critical levels that we had to take out, and we just didn't take them out. Now, can you very clearly see what's happening here, Alpha Fam? I hope that you can, because, you know, if you can see how we can consolidate, you know, in the middle before pumping up, right? Or how we can get rejected in the middle before, coming back down, right? Here we had a pretty solid, just a slice through the center, right? Here we had a nice rejection to the upside, actually. Here we had a nice rejection off the mid band to the upside. And what's happening right here? Okay, what was that chop about yesterday? Well, the chop was really that the market, I mean, if we just, again, just zoom in there, the chop was that the market was trying to negotiate whether or not it was going to reject to the upside or reject to the downside this center channel on this kind of a macro channel that we have being carved out here. And look what happened. We ended up rejecting to the downside. So in my opinion, you know, just based upon the theory of this channel that I have created for you, Alpha Fam, okay, as a stark visualization of what's going on, this looks very similar to what happened over here. Okay, it looks very similar to what happened over here, looks very similar to what happened over here. And you can see, yeah, there was a lot of negotiation, right? Like it just didn't want to go all the way down, but eventually it went all the way down. Same thing over here, again over here. And we're seeing the same type of pattern over here. It doesn't want to go down. There's a significant amount of bullishness still in the market. And so it's a tough negotiation, right? They keep coming back to the table trying to negotiate. Are we going to fall over or not? But at the end of the day, as long as we're under this midline of the Bollinger Band there, then we are going to come down. Now, if I take a look at some bigger structural things, then I can establish some levels for you, which is we have a candlestick's critical level right here at this wick, right here at this wick. And so anything under 26,525, you know, we can say 26,500 just to kind of round that out. Then I would say probably look out below. This area is going to be just coming back down to the bottom of the channel. And if that happens in a nearly straight line, then we would be expecting to hit, you know, somewhere around 24,700 or as low as 23,700, just assuming that this channel holds up the way that it's held up in the past, which of course there's only two instances of that. You know, you can say three, but it actually front ran it back here. Then we could just plausibly suggest this area. There's always a little bit of a center line in between any area. You can see this kind of chunky kind of price action right there, right until the middle. It's kind of chunky price action right there in the middle. And so if I could suggest a mid area, right, just a little mid area, then we could be talking about 26,000 for a possible bounce, like some type of fake out, right? Like some type of fake out, and then we come back up. If that happens, of course, it's probably going to have its own kind of range. So don't quote me on 26,000 perfectly, but anywhere in that area, anywhere along these type of supports that we kind of have established in the past. Let me do maybe some type of a fall zone over here. Let's get out of the trend, and we can see that we have, a little bit of a horizontal right here at 25.8. Again, we have this type of area down here, which is 25,300 to 24,300. We have this kind of little area down here, which is 23,400 to 23,100. And then, of course, we have this kind of huge area down here, which is 21.4 all the way down to 19.9, assuming that that holds. And then below that, we could probably point out this 18.3 and of course 17 and a revisit to 16, maybe 400-ish, whatnot. Those would be the levels. And again, you can just rewind and replay it back if you want to hear it. But those would be the levels that I would think that we could possibly tap, on our way down, should we just go into free fall. And of course, these yellow prices over here correspond to that. So if you want to mark them off on your own chart, feel free. Now, other people may define zones and levels a different way. Some people use the 2-week, the weekly, the daily. Some people use 4-hour lines, whatever. But in general, we come to pretty much similar areas. And then, of course, don't forget we have that trend box. So if we do just align these together, you could see, perhaps you could imagine something like this, where maybe we get a little bit of bounce, kind of like this, maybe kind of carve into here, and then maybe put in some structure and maybe try again, right? Like that could happen, sort of like what we did over here. Or we would break down and then get rejected by that yellow band up there, come back down here, right, and just try this one before continuing to the downside again with that kind of 21 to 23,000 area being the next critical one, other than this kind of like 23 to 25 to 26, right? These are pretty big areas to be looking at. It's just that we don't have a crystal ball. Nobody knows exactly which line it's going to hang on to, right? It just depends upon you guys. Are you going to buy at that price, or are you not going to buy at that price? If you're not buying at that price, why would you expect other people to buy at that price? You see what I'm saying? So that's how markets work. Okay, like, so you tell me, what price are you going to buy Bitcoin at, right? And that's probably where the market would start to bounce. And of course, there's always the possibility that where you sell your Bitcoin, right, is also where it bounces. And so we have to remember these kind of critical levels, because if you're starting to get freaked out and you're selling all your Bitcoin and everyone's selling all of their Bitcoin, all that stuff, then maybe the market just bounces, because it's a good price for those bigger players, since all the small players are getting shaked out of the market. But anyway, the second level that I have on here is the 2-week critical level. And so this is the level that we have to hold on the 2-week, okay, for its chart to make sense. And maybe I can jump over to the 2-week chart. And you can see we have 10 days to go, but it's more or less in line with this wick over here. And if we hold that area, then this candle could start to turn back up, or at any rate we wouldn't have breached that wick low on a candle closing basis. And so our volatility still would have the ability to push us to the upside. But should we break that wick low, then there's just a much higher statistical chance that volatility within 10 days is going to continue to push us down. So even if we just chopped around for a week sideways, again, if we lose this basically $27,000 level, then volatility could end up just pushing us to the downside. Anyway, we are getting a little bit of a bounce here. Look at that. Look at that, Alpha Fam. We are getting a bounce like almost to the penny off of that 2-week critical level that I established. So I must be doing something right, because just ignoring the wicks, you can see the candle body like literally stopped at my 2-week critical level. And so the market is saying something is going on with that level. And for a deeper analysis with that, let's go ahead and just take off these trend lines. Let's go ahead and just for some truth in advertising, just for some transparency, let's just check out how our 6-hour alpha momentum pools have been holding up. Okay, so let's just take a look at the, I've just got a couple sets over here. Just look at the oldest one. Now, would these lines have served you well? Okay, Alpha Fam, would these lines have served you well? Remember, like, this is a 6-hour chart, so these are multiple days. Okay, we never got above the 6-hour volatility pivot over here on April 30th. Okay, we never put a candle close above this area. You can see the candle closed right at my volatility pivot, and we weren't able to sit on top of it. And so the volatility pivot was above our head. And then what happened? We got underneath the alpha momentum pool, and right, just look out below, because we ended up going all the way down to the bearish control zone. Bulls were able to defend the bearish control zone. We popped back up for a second chance, right? Second chance, guys. What happened? We still weren't able to get over that volatility pivot that I established weeks before, right? And not being able to do that, we got underneath the momentum pool again. And of course, there would have been multiple updates since then, but I'm just giving you one selection to show you how over time these levels still can serve you very well. We got underneath the momentum pool, still underneath that volatility pivot for this candle. And what happened? Right? Came all the way down again. Now let's go ahead and throw on a newer one, right? One that happened after that. So that was this level up here, basically. Okay, now let's look at the one that was at this level, right? Because there's a kind of a little median level right there, and you can see the volatility pivot was at 29,000 right there, and the alpha momentum pool right here. We weren't able to capture the volatility pivot. We were underneath the momentum pool, and what happened? Right? We broke the bearish control zone. You can see that bounce. And guys, we've just been struggling ever since. What is this Darth Maul candle up here that's stretching out? Look where the wick ended, at the bearish control zone, almost perfectly, right? Which just happened to correspond with that Bollinger Band's median line. You see the logic that I'm using. I know that this isn't the most easy method to understand, but you can see that whether you were using that kind of ancient set of 6-hour chart analysis or the newer one, they still told you very important things in terms of warnings and what could go on. So now let's look at the next older one, the pretty much one of the latest ones, which did correspond with this area over here, this area over here, and then of course this area over here. And we were underneath the volatility pivot, right? And the only thing is that, look guys, we tried and we tried and we tried and we tried, and we were rejected, heavily rejected from this alpha momentum pool. Okay, we were never able to close candles to add some momentum to our upside. And so what happened? The Bollinger Band midline just smacked us down because we never added to our momentum. We were stuck under this bearish control zone. And so the bears were in control. They they yanked the chain on our collar, and like a good dog, we just came in the direction that the bears pulled us, right? Unfortunately, we had that collar around our necks being in that bearish control zone, and sure enough, we broke under the volatility pivot. We struggled as much as we could to hold on to it. We dumped, we dumped, we dumped, we dumped, we dumped, and of course, we're still here in the dumps. Okay, now is there any price action corresponding to this area? Yeah, there's this little kind of nub over here. There's little kind of nub over here. We're really hanging on for dear life on this kind of structure that is up here, right? You can just imagine some type of a channel, some type of a just sideways kind of price action. And sure enough, I can give you some new levels. So these are the new 6-hour levels. These are the ones that are going to serve you well for today and probably the next couple days, assuming we don't just fall to hell to a new level, but a new level of hell essentially. But guys, I just wanted to show you the alpha momentum pools work. Okay, you need to pay attention to the volatility pivot. You need to pay attention to the alpha momentum pool. Where are you relative to those two things? Are you above both or are you below both? You've seen what can happen if you lose the volatility pivot. And then if you lose the momentum pool, even worse. Okay, so guys, you really want to be trading in the opposite direction, right? So if the momentum pool and the volatility pivot is above you, probably you're gonna be biased short. Okay, it doesn't. Yeah, you can bounce around in the pool, no problem, but you're probably statistically more likely to be going to the downside. That is until you find some type of critical support, like what we've been establishing right here, right? That's when you get that chance to bounce. But overall, you're probably not going to just be like carefree longing, okay, when you're underneath the momentum pool and underneath the volatility pivot. If you are above the momentum pool and you are above the volatility pivot, then you probably don't want to be carefree shorting. Okay. Now, currently, price action is just hanging on for dear life in the momentum pool right at the bottom of it. So we could get a little bit of a mean reversion play, perhaps to grab some of this liquidity, bounce around in that momentum pool, and try to grab that volatility pivot. The current 6-hour volatility pivot is currently at 27,000. Let's just call it 200 to be conservative, and then general continuation is up here at 27,000 to let's just call it 50, okay? But we don't really get out of the bearish control zone unless we're above 27,000, let's say 400 to be conservative, guys. And so again, like I really like you could play the pool, okay? Like we often ping pong in that pool, but if you really want to get above that volatility pivot and the pool, and then you have some potential for strength behind you, you're also going to want to be outside of that bearish control zone, okay? We're just very weak inside of it. And so above 27,400 is your better bet, although, again, just on a critical levels basis, 27,250 is kind of your front run area. And then where are you going to lose this system? Underneath 26,925. Underneath that, then there is the potential for that kind of, a whistle to the downside or whatever. But these this Bollinger Band's midline should be coming up here. And so, if we flip that and start using that one as support, let's say we do something like this, right? The Bollinger Bands continue to come down. Right, we've got the momentum pool up here. We're kind of ping-ponging along there. We temporarily grab it. And oh, hey, look, we grab the Bollinger Band while we're doing that, right? Maybe we get rejected from the bearish control zone the first time, but the Bollinger Band starts scooping up. We start getting up there. Then I would say, ooh, that's looking pretty good because the Bollinger Bands are probably going to be supportive while you have the volatility pivot and the momentum pool. And then we're going to see that potential for the upside. But for the time being, just kind of ambiguously swimming around in the pool, which again, there is no There is no significance of this pool when you are inside of it. It's just neutral, okay? It's just like you're just doing your thing. You're just negotiating with the other parties. That's all. This is kind of like the negotiation table, okay? They're just negotiating. You want to be outside of it or underneath it, on top of it or beneath it, and then you want the volatility pivot supporting you in that direction. Let's go ahead and jump over to the daily because the daily should be very important in terms of its volatility pivot, which you can see is still here at 29,000. Okay, like it's 28.9 something and some odd change, but just call 29,000. And unless we get above that, I don't have confidence in this system. Okay, I just cannot have confidence in this system. Even if we got above the momentum pool and the Bollinger Bands, there would still be a high chance of us being smacked down. And where can I show an example of that? Look at this. Above the Bollinger Bands, right? But got smacked down. Above the Bollinger Bands, but got smacked down. So the Bollinger Bands are nothing by themselves. Okay, so that's just by itself, that's totally meaningless. Okay, what we need is to be embedded above the volatility pivot here, and then because these volatility pivots were up here before. Remember, we took a look at the past charts on the 6-hour, and the candles never embedded themselves above it. And so that's what happened there. You use these systems together. You can't just pick and choose which one you want to be just based on your emotions, if you're feeling bullish or not. This is how you fake people out. Okay, you get on top of this stuff. We're mooning, right? But you never got the volatility pivot, sir. So what are you doing, right? And let's see here. So yeah, so basically we're gonna need to get above 29,000 now. Does that mean that we can't bounce around in this area? No, I mean, look at this. We didn't do anything special here, but we bounced around in that area. And so could we just waste, the next 10 days of the 2-week chart, right? Or the rest of the month just kind of bouncing around sideways? Well, yeah, we can, because I already showed you that we have these critical levels here. And on a candle closing basis, we haven't violated 26.5. And on a 2-week basis, this is going to close in 10 days. So we have 10 days to just hold this level of 26,900. And so as long as we hold this level, we could wick down there. We could do whatever. We could just screw around. We could come and tap the daily and just come back down. We could swim around the daily momentum pool. All sorts of shenanigans could happen. But the thing is that over the next 10 days, you want to hold that level. And, then you're going to be able to play sideways. And then this volatility pivot on the daily might start coming down. And then you might have that shot, to perhaps go to 35. It's not game over yet, guys. It's not game over yet until we lose these critical areas down here. It is starting to get dicey, though, okay? So you would be forgiven if your feelings are starting to get the best of you, because, of course, you're going to want to protect yourself whenever you have a distribution model that is starting to threaten to breach the neckline, because it would suggest to the downside, okay? But just don't forget, if we put a trend line here, you can see there is plenty of, chunky room for us just to bounce above and then eventually even flip. Okay, even flip and then get a run to the upside. Just can't forget that. Okay, but as long as we're underneath this diagonal, let me just take this one off. As long as we're underneath this diagonal, and even if we're holding that 2-week pivot, if we're just bouncing in like this is a distribution wedge. Okay, this is a distribution wedge, and then the measured move could easily, you might not break down from this head and shoulders, you might break down from the distribution wedge, which then could take you to that $23,000 area, okay? So just be careful about that. Let's see here. I think that's plenty for today. Really nothing that I could add to that, I think. It just pay attention to the fact that we are, we did break under that Bollinger Band midline right up here at 28.6 essentially. And so that would have been your cue to kind of get out, right? Like losing that area there. And, if you're trading on the daily, that has a very spicy look that looks very similar to this one over here. So again, like you can make your own choices, but at the end of the day, we are just in this little range. And we haven't violated the bottom yet. So do you buy the bottom and trade the midline or even hold? And then you have your stop loss somewhere down here? That's up to you, okay? You're the traders. Like you guys can define your own risk management. When there's a lot of fear, there's also a lot of reward, right? And so it's up to you. But I would say that for the time being, the week, the week isn't looking the best, as I mentioned previously. Let's throw on our. Let's see. Did we do a week update? Maybe it's been a while, but the week isn't looking the best. The 2-week isn't looking the best, and the daily isn't looking the best. And just throwing on our new 6-hour again. Where we are right now. Okay, where we are right now is just in no man's land. Okay, we got to get above 27,000, 200. And then I'll start thinking, are we going to get out of that bearish control zone? Okay. Otherwise, I don't know, just kind of chill out. I know what we could do. Let's just throw on our EMAs really quick. And you can see underneath the 200, very bearish, right? Underneath the 20, bearish. Underneath the 9, bearish. Underneath the 4, bearish. And here's some, this is a real problem. That could be what this bounce is about, a retest of this. Like, again, like, EMAs are beautiful. You break it down here and look what's happening. To the dollar, we are retesting the 300 bearishly and the 300 SMA bearishly to the downside. So again, we have to breach back above that. We are getting a 300 squeeze to the downside. We are getting soon a 300 squeeze to the downside. That could be a pretty powerful squeeze. Okay, that could be a pretty powerful squeeze. It is the 6-hour, not the daily, but it could still be pretty powerful. Let's go ahead and take a look at the daily really quick. And yeah, I mean, this 89 here is trying to be supportive, but I just want to point out we broke below the 800 EMA. That is granddaddy EMA. We broke below the 800, and look at this candle that followed breaking down from the 800. Just a boom, guys, just a boom. Like we just lost it, right? And so yeah, the 89 is trying to give us a little bit of a bounce here. And we do have that kind of support in this area, which does go along with that measured move to the downside. But again, maybe those shorter time frames are going to lead us. That kind of a 6-hour bearishness, maybe that's going to lead us, or it's going to save our butts. And then at the end of the day, when the 2-week closes, which has been really driving this market, in 10 days, we're going to find out, did we make it or did we not? And let's go ahead and why don't we just take a look at what our EMAs do look like on the 2-week. Well, let's take a look at the week first, because this week will close. And you can see we do have this squeeze here to the downside, and it is continuing. Lots of support in that 24 to 25 area, so that's good. But still we do have a pretty nice squeeze there. And then on the 2-week, yeah, the 2-week still, it could want to fight. It could want to fight. We could come all the way down to 25, no issues. Okay, maybe a little wick below, but as long as we bounce back up, we could come back. We could just come back down here and just check it out, and then continue on our way. So, it is what it is. These are starting to round a bit, and you can see that when we start losing momentum on the EMAs, that's when we can get those scary wicks to the downside. Okay. Now, what I do like is that we do have an Alpha 9 knockout coming here. Now, I haven't mentioned that in a while, but an Alpha 9 knockout is when the 9 EMA and the 9 SMA have a crossover. Okay, this is something that I pretty much made up, but it's something that I've observed a lot. You can see that when we have a crossover of this SMA and this EMA, and they crossed right here, look at this, a huge push to the downside, right? And look at this one. We had a different type of cross. They crossed the other way and a huge pump to the upside. And we're going to have a similar cross right here, okay? And so if this crosses and this crosses, then that could potentially spike us up, and depending on which side we're on it, it could potentially spike us up, or it could pull us just ridiculously down. You can see over here, the opposite one pulled us down. You can see right here, we had the same thing as this one, and we got one last spike to the upside. So this could give us a spike to the upside. You can see here we had the opposite, and it just brought us all the way down. You can see we had, well, we already went over these ones. So again, like guys, we do have this Alpha 9 knockout, and it could just knock us out into the other direction than people think, at least temporarily. It's usually a corrective move. It's not a permanent move necessarily. So I'm going to pay attention to that one. That is on the 2-week, so it will take time to play out. Again, the 2-week closes in 10 days. So lots of interesting stuff coming up on the charts, It's just interesting. Because if we do get that knockout to the upside, and then the monthly closes, right? And we got a punch to the upside thanks to the 2-week, which was just going to be a corrective move before continuing to crash down. Well, the monthly might step in and say, hey, you know what? I closed pretty well thanks to that punch, and maybe we're just going to continue on course, right? That's going to take a while to see if that happens or not, but so here's the monthly. Currently, we're kind of being threatened a bit, right? We're being threatened. We could come back down to the 10 or maybe even the 50 here over at the 25-ish. Okay, there's the 10 SMA all the way down here at 23. So a wick down to 23 on the monthly, it wouldn't be terrible. But then we get that punch, right? We get that Alpha 9 knockout on the 2-week. It brings us back up. And then the month closes, maybe like a week after that or so. And the month closes, pretty okay. Then maybe we just continue to go, maybe just sideways, right? So just trying to think that out in my head in advance. And so I am glad we went over the EMAs here. It may just look like a gobbledygook to you guys, but for me, this is an incredible ballet of price action, which does have a very intricate, choreography to it, and which could lead us to some interesting things on the charts. So, guys, that was your alpha for the day. Stay safe and happy trading.